Hi folks, this is Lee with the Market Sense for the week of May 28th, 2019. Charts in this presentation are provided to us by the Trade Navigator software from Gettess. And looking at a weekly bond market chart here, they have just rocketed right up to new highs and show no sign of stopping. Now we do have resistance right in here. This is, let's call it 152.05 to '08, roughly in that area. I mean, that's possible that that's resistance, but you can see they're at new highs for quite some time. Usually not a good idea to argue with the market making new highs like that. The best support this week looked to be around 150.10, and you can see they've been nowhere near that, so there is a chance they could drop back down. And heck, even 149.16, the middle moving average, is possible. But at this point, they just seem to be going up. They even got fairly good economic news Tuesday. We had Monday on Tuesday this week. They got fairly good economic news and they rallied anyway. So that's a very positive sign. You know, a market rallies on news that should have knocked it down a little. That's, don't really want to argue with upside here. If they do stall, though, they're right in the area where it should stall from. So we'll keep an eye on them and go to stocks because, quite honestly, they're pretty doggone interesting. After getting this little gap down after making new highs here, they have just sort of held in here and they're down testing these lows again. Now this 2700 area should be, or 2800, I'm sorry, 2800 area should be very interesting. It wouldn't surprise me to see a quick break and recovery of it. It is unlikely that they will just hold 2800, more likely that they break it real fast and recover it if they're going to turn back up from here. And if they do, the 2857 area is the very first level of resistance for the week. If they don't hold anywhere near this 2800 area, boy, they could go a lot lower. We could be seeing a big change in the way things are operating here. We've got, just below 2700 to get to the lower Keltner channel. I'm going to show you something higher than that, but that's, I want you to, I'm not predicting doom and gloom, but I want you to understand the downside potential is fairly large. Heck, they've been up since March of '09, right? So they could go lower, and the weekly here looks like below 2700 is a distinct possibility. Now, if we look at a monthly chart, two things. The monthly lower band here is at roughly the 2750 area, so that certainly could be support, and we'll keep an eye on that. The mid-Keltner kind of comes in around the 2700 area, just like the lower band does on the weekly, so that's an interesting deal. But I just wanted to remind you, I pointed out this megaphone or reverse point wave pattern back a couple weeks ago where you make a high, make a low, make a higher high, make a higher low, and then go to one more new high and then give it up. Well, this high back here was about 29.56, and we went to 29.61 here. Not a lot higher, but it qualifies. So again, I want you to understand the downside potential is substantial here. And I'd give credit to whomever said this first, but I don't remember who it was. You have to understand, we're one tweet away from new all-time highs. We're also one tweet away from about 20% down. That's a very unusual condition for the market to be in. Never experienced that before, but here we are. So that's what we've got for you today. I hope you can find something